The bond is nothing but an instrument. When you invest in fixed deposit, what is fixed deposit? It is a receipt which is given by bank to you that it is written there that you have given or you lend money to a bank, so much money and at this rate. Bond is also the same thing. It is in writing, you are getting some confirmation that this is the interest and principal you are going to get it. That's it. That is called the bond. The advantage of bond is you can hold, you can decide to hold till maturity. On the maturity, till the maturity you will get the principal on maturity and interest at regular interval. But in case if you require money, you can sell bond just like equities on a click of a button on the market, and you will get your money on next day. Till the time you are holding the bond, you will get interest for your hold period. That's the advantage of bond.
Folks, welcome to PaisaVaisa. I'm yours Anupam Gupta, and in today's episode, I'm thrilled, really thrilled, because after a very long time, we are going into the fixed income segment. We are talking bonds with my guest Suresh Darak, founder BondBazaar. Suresh, welcome to PaisaVaisa. Thank you so much for doing this for our audience.
Thank you, Anupam, to invite me in this show.
It's great to have you here, Suresh, because bonds are something that I don't think the retail investors understand as easily as they do equity. I don't know who it was who said gentlemen prefer bonds. It was some famous economist. But let's start from there. Now, what are bonds? How are they different from everybody's favorite product, which is a fixed deposit? Of course, now it's also a debt mutual fund. So what exactly are bonds? What are the different types of bonds?
Actually, you will surprised that, once you try to compare bond with equity, because bond is much more simpler. And everybody actually, directly or indirectly, the type of bonds which we are talking about are involved in their life. It is not that nobody is involved. What is bond? It is simple. You are giving money to somebody, and in return you are getting interest and principal. It is just like you are, lending money to somebody.
Yeah.
And in return you are getting interest and principal. It is the same, nothing else. But till now, you are giving money to whom? Banks. In return, they are giving you interest and principal. To one of your friends. The same thing is there. Now you are giving money to government and corporates, high-rated corporates. In return, you are getting interest and principal. The only thing is, the difference is, bond is a regulated product. And it is easily tradable on market. That is the added advantage with bonds. And the bond is nothing but an instrument. When you invest in fixed deposit. What is fixed deposit? It is a receipt which is given by bank to you that, it is written there that you have given or you lend money to a bank, so much money and at this rate. Bond is also the same thing. It is in writing, you are getting some confirmation that this is the interest and principal you are going to get it. That's it. That is called the bond. The advantage of bond is you can hold, you can decide to hold till maturity. On the maturity, till the maturity you will get the principal on maturity and interest at regular interval. But in case if you require money, you can sell bond just like equities on a click of a button on the market, and you will get your money on next day. And till the time you are holding the bond, you will get interest for your hold period. That's the advantage of bond.
And that's assured. Or as far as close to assured as is possible. The interest I'm saying each and every year.
Yeah.
Chaliye, theek hai, sir. So, given that this is still relatively a new space for retail investors, that the concept of buying and selling bonds on a platform, I want to start with clarifying on what exactly is BondBazaar in the whole world of regulation. Because I remember SEBI had taken out this paper a few years ago about online bond platforms, or OBPPs, because SEBI had also realized that this market, this segment, the players in that are offering bonds and there are transactions happening, but it was not regulated. And then it got regulated. So I think if we can explain to our audience in terms of regulations, what exactly is BondBazaar?
Okay, so bond is a highly regulated market. One is, it is like from the issuance till secondary market. When the bonds are issued, SEBI regulated merchant bankers are part of the bond issuance. They are issued just like equities. Simple. The process is as good as equities. That is first part about the bond issuance. And when you are buying and selling bonds, the way you buy and sell equities on the exchange, you can buy and sell. Again, regulated. They're the same thing. So the people who are providing you the platform to buy and sell bonds should be regulated.
Yeah.
So first thing, they comes under the scanner of SEBI. Yeah. You should be a SEBI regulated broker. Now, what is OBPP? It is Online Bond Platform Provider. Okay. This is a short form. What SEBI has seen, probably since 2020 or 19, some players started offering bonds without taking license. If you go to the earlier laws of National Securities Act or something like that, so there it is clearly written, if you are dealing in securities, you should take license from the SEBI. But certain people were offering bonds without taking license from the SEBI. So SEBI came out with specific guidelines for bonds that if anybody is offering bonds online, they should follow a guidelines which is called online bond platform providers. This is what online. So first thing, you should be a broker with SEBI registered broker of BSE and NSE, and then additionally you should take online bond platform provider subcategory license. So this is what the regulation is all about. What it means, what regulations means, that when you are selling bonds to a third party, to anybody, any customer, there are minimum disclosures about a particular bond should be there, like rating rationale should be there, information memorandum should be there, coupon should be disclosed, yield should be disclosed. There are certain 7 to 8 parameters should be there. Second thing is, all the bonds should be bought and sold through the exchange platform.
Okay.
Earlier, what people were used to do, like they were selling bonds and a retail customer is buying bond. They used to tell the retail investor, transfer money in my bank account and I will transfer securities in your demat account. There can be a chances of fraud. Right? Retail, you can, sometimes you don't know whether the settlement of the transaction is done properly or not properly. You may sell that the bond is sold at 10% coupon yield, but actual yield to the retail investor may be 9% because there is no intermediary. SEBI with this regulation brought exchange into the entire picture. That was a game changer. Transparency is coming, trust is coming, and it is also ensuring that the settlement is through a SEBI regulated platform, which is BSE and NSE.
So that increases the confidence for
Absolutely.
someone. For someone like me who wants to buy and sell bonds, I know what I'm getting into. SEBI is there. Kal kuch agar ho gaya, then SEBI, I can file a complaint with SEBI and take it from there.
Absolutely.
Versus before where it was...
There was nothing. So recently, if you see, in the 3 platforms were banned by SEBI because they were selling products which was not regulated by SEBI. And SEBI was very particular that first thing, you have to be an online bond platform provider. Second thing, you should not sell products which are not SEBI regulated. Or any other regulators, like even RBI regulated or something like that. Because, they want to protect the retail investors. And so the retail investors should be very clear that whenever they are buying bonds, the platform should be SEBI regulated. They should have an online bond platform provider license. It protects their interest.
Folks, please keep note of that if you're interested in buying bonds, because, bonds are sold by anybody and everybody with this promise of high interest rates, high yields, and God knows what. Just please ensure that it is SEBI regulated. You will find that on their website, the license numbers, the license documentation, everything has to be there on the website.
Absolutely.
So you also mentioned brokers, Suresh. So I'm assuming that your normal broker for equities, someone like an HDFC or Kotak, SBI, whoever it is, also offers bonds, right? So, or they don't. I don't know. So how are you different in that way?
Okay, see how bonds are offered. Primarily, there are 2 platforms from where the retail can buy and sell bonds. One is the cash segment. It is the same cash segment where, equity, F&O, everything is available. Both are regulated by BSE and NSE, offered by BSE and NSE, right? But the advantage of cash segment is, it is an anonymous trade and guaranteed settlement. Anonymous trade in the sense that you don't know who is the buyer and seller. So you get the best price of all the bonds. And all the bonds are by default listed on the cash segment of the exchange where all the equity brokers, everything is. The problem is, it is not user-friendly platform. They just tell you that, this bond is available at 102 rupees. As a retail investor, what you are going to make out of it? Nothing. What you want, that 102 rupees means I am getting 11% yield, 10% yield or something like that. It requires a lot of automations and everything that equity guys have not done. But the entire feed and everything is available on the exchange. That is one platform. But the advantage of that platform is that you can buy and sell any bonds. You can sell also. That's the biggest advantage. So for the retail customer, that is one of the best thing, the cash segment. And all the bonds are available from 7% to 20%. There is a government bond is also available. There is a corporate bonds also available. They can choose what they want to buy. That's the best thing. Now it comes to the other platform, which is called request for quote platform, where only bonds are available. Now the disadvantage is the broker is a seller and you are the buyer.
Okay.
Now you can buy only those bonds which broker is selling. Only at that price where broker is selling. And second thing, you can't sell it back. You can't sell those bonds to them. If they want to buy, they will buy. If they don't want to buy. So that's a big difference between cash segment and RFQ segment.
Okay.
But the advantage of RFQ segment is they will quote one yield at 11%. You can't quote the yield what you want to. But there, some special bonds are also available for you. So both the platform has their uniqueness. One of the thing is. But the biggest thing is, there are people like us who offer both the platform from the retail perspective. For by their choice, they can buy any bonds and sell also. And that's what cash market offers them. That's what when we saw equity and those brokers, it is actually no broker is offering as such. They are not offering bonds. They have an infrastructure, but they don't have any incentive to offer bonds.
There's no money to be made there for them.
There is no money to be made. So why to? In fact, if you buy the bonds, you will not trade in FNO. So why to give you a platform where you can make money, also good money, but they will not make money.
I mean, there's also the fact that bonds for the longest time have been an institutional product. Large companies, large banks buy and sell it. For retailers, it's still something relatively new. We'll come to that when we are talking. I want to know about your journey now, right? You're also CA. BondBazaar started in 2020, of all the years to choose. Tell us about that. And your team is very interesting. So what was the idea behind this?
See, I think, yes, I am a corporate banker. In largest journey was in L&T Financial Services. I was part of the core team set up L&T Infra Finance in 2006. Somewhere 15 years. Largest part of my career was in L&T Financial Services. And that time also it was more like a startup, first time private sector player is coming to do, and it becomes one of the largest infrastructure financing institution in India by the time I left in 2019-20. So, somewhere, infrastructure was also taking a shape, and when the counterparty risk, when the risk is reduced by the government, post-construction, all the infrastructure players were raising money from the bond market. And that's why I started thinking that let me get into the bond market somewhere in 2013-14. And then between 4 to 5 years, it became one of the largest bond desk for infrastructure projects. But in 2018-19, I realized that, primarily only institutions are subscribing bonds. And they are fair weather friends. When the crisis hit, when the liquidity crises are there, they stop subscribing to bonds. In fact, everybody becomes a seller. That's where somewhere in 2016, 17, 18, it hit me the idea that, retail is not there. Retail is there indirectly because, retail go to the banks, do the FD, and the banks are buying the bonds. They give money to their mutual funds and then they are buying the bonds. Insurance company, they are buying the bonds. But in the process, they lose 3 to 4% interest. Because, of course, intermediaries means they will make money. But retail, there is one big advantage. They are actually the market makers during bad time. You might have seen in the equity market, whenever the market is falling, retail is the biggest buyer. Now, today, the situation in equity market is they are matching the sell volume of DI and FI, which is big thing. That's why it stuck me the idea that let's create a platform where retail can buy and sell bonds. And that's where, thought of bond market. So here the purpose was not just to create a platform where you are the seller and retail is the buyer. You wanted to create a platform where the buy and sell both are possible. And the minimum amount should be as low as 100 rupees. Like today, government bond, 100 rupees, corporate bond, 1,000 rupees.
Okay.
It is absolutely retail. Any quantum you can buy and sell. But of course, when you think about all those things, it means you are creating something like, equity market automation somewhere started in 90s, 95 or something like that. It requires a lot of good people who can understand, decode the market, because bond is a highly regulated product. You require a good team who understand the regulations also, good operations, tech, everything. First thing comes the tech operations. So the team, really good. Everybody liked the idea. The first thing was having a partnership with Trust Group. Nipa was very keen to start the journey with this entire thing, and they are one of the largest bond market player in India. It is always good to have a partner with you who understand the market well, who have a long-term vision. And then the team building started, and really good people from the various market players who have a good experience and other things. When I was building a team, one of the thing was that we are not here to sell a tech platform. Because retail is not going to come to me to buy, you have created a really, really good, amazing tech platform. That is the ease of doing transactions. They were here to buy bonds, and they want that confidence that, they are buying good bonds, they are getting good advice to buy good bonds, and they are very well researched. And that's why when I am building a team, the people from the bond market, the people who have spent a lot of times, decades of experience in the corporate finance, they become part of the team. And that's how the journey started in the bond market.
Very interesting. Yeah. Now, moving on to the actual investment part, the product, like you said, bonds. Who is bond investing for and who is it not for?
It is for whom? Right. I tell you one thing, when, we all seen, in fact, just one incident is there. My maid was using the Uber now. And sometimes you will find that, it is too difficult to get the Uber nowadays.
Yeah.
When Uber started in 2000, probably 10 years back or something, or 12 years back, it was a vehicle for probably the upper class. Just book and it is good. But at that time also the fare was as close as to your auto fare, right? So it means technically it was good for everybody. The entire 140 crore of people, actually it is good for you. But you can't do the marketing thinking about that. You have to first make it popular with elite class or something like that one.
Okay.
Like bond is also the same thing is there. There are 75 crore people who are investing in fixed deposits. Or their money is lying in saving account, in current account. In saving account, you are earning less than 3%. In current account, you are earning 0%. You know that how much money is lying in saving account?
I'm sure it's a huge number. I have no idea about the quantum, absolute number, but
70 lakh crore.
Wow.
Current account?
Huge.
20 lakh crore.
Oh, okay.
It's 90 lakh to 100 lakh crore, which we call CASA, is actually the income of all the banks. If you even assume 8 to 10% return, it means 8 to 10 lakh crore. That's the entire profitability of all the banks. Then there is 100 lakh crore in fixed deposits, where there is 7% return or something like that. If you are investing for less than 33 months or 4 months, sometimes you get less than 3.5%, 4% return. So this product is good for everybody who has money, who has kept money in the banks. Because suddenly you are getting anything between 3 to 7% higher returns. That is first thing.
Okay.
Just doing some bit of more understanding about your money. Why to be lazy? Do some more understanding. Then advantage of bond market is you can sell anytime.
Sure.
On click of a button, within 24 hours, the money is there in your bank account again. So you are getting higher returns. You are getting liquidity when you want the liquidity. That's the advantage. So just by providing direct access to you, it's a huge advantage. And see, now, when you say it is good, right? The immediate question will be, तो अभी तक गया क्यों नहीं है? Right? The reality of the entire life is, अगर आप इंश्योरेंस देखोगे, इंश्योरेंस को पॉपुलर किसने किया?
LIC?
LIC तो ओरिजिनेटर था. बैंक्स ने.
Okay. The
private
sellers.
sector आए. So then they
distributors,
distribution, right?
Yeah.
Now think anything, any product you can think of. Actually, banking channel was used to make the
correct. Yeah, mutual funds, policies, FDs.
FDs. यहाँ का सबसे बड़ा problem ही ये है. It is a counterproductive to banks. Why to tell the people don't keep your money in the saving account, or fixed deposit?
Yeah.
So distribution channel will always be compromised. So people have to put really good efforts to create the distribution channel and educate people about this one.
Yeah.
That is where the difference is there. That's where, when you say it is good for whom, actually it is good for everybody.
Okay.
But the first thing is the people who understand the market, who can actually spend time. Once they will start understanding, they will become more disciplined. They will come in the bond market first.
Yeah.
And once the other people will learn from them. Yeah. Okay, they are making money. So it's a long process.
Yeah. I mean, I just have one point there on capital risk. Bonds also carry capital risk, depending on interest rate cycles and all that. So there is that element also in this, which an FD you don't have any capital risk. जितना डाला उतना तो वापस मिलने वाला है. Interest rate might be a little bit less. So
So let me answer question one by one. You said interest rate risk, right? FD में नहीं है.
FD में interest rate है, but I'm saying return of capital. At least मैंने 100 rupees
So
की
let's
FD
do
ली.
one by one. Right? आपने you have done FD at 6%.
Yeah.
For 3 years.
Yeah.
You are going to get 6% only.
Yeah.
Now rate goes up by 1% or 2%.
I lose that straight away.
Bond also you done at 11% return for 3 years, right? And rate goes up by 2%. And if you hold till maturity, is there any risk?
No, you'll get your capital back. Well, I'm saying that you're just buying what was of face value 100 at 102. 102 तो आपको वापस मिलेगा. Capital जो आपने डाला था. But you'll get 100, not 102.
So in the bond it is same.
Yeah.
If rate goes up, hold till maturity.
Yeah.
There is no loss.
Yeah. ठीक है.
If rate now second is about capital risk. You said right something. कितने bonds fail हुए? That is one question. Second thing is क्यों fail हुए हैं? और जहाँ fail हुए हैं, are you getting something in return? There are issuance like DHFL. There is a 40% return was there. Return of capital was there.
Yeah.
And that was one fraud. Let's be very clear. But advantage, what we make a mistake, right? When any market is developed, there are certain loose ends are there. People exploit those things, which happened for, let's say, in certain cases also. But after that, regulator become much more tight. And then they ensure that such things are not repeated in the future.
Sure.
The problem with the people is they think about the past mein kya hua. What they don't think, what has happened after that one. See, please understand, in India, we have really good regulators like RBI and SEBI. If there is some issue happened in the past, and if you are not part of that issue, and you are not getting stuck in that issue, be happy and enjoy the benefits after that one. Just imagine that, Harshad Mehta ka kaand jo hua tha 1992. You think that, okay, the fraud has happened. And after that, you get away from the equity market forever. Rather, realizing that SEBI might have become more vigilant after that one, putting right infrastructure in place. And after that, there was real growth in the equity market. But you lose the entire journey because you had a memory of 1992.
Yeah, I mean, I get that. I think what I was referring to is let's say that you buy a bond when interest rates are low, and when interest rates start to go high, then that 100 rupees that you've paid or 102 that you've paid will become 97, 98, 99. So optically, once I have bought at 102 and I'm selling at 98, after of course taking into account the 1 year of interest that I've also got, तो वो थोड़े दिमाग में खटकता है ना कि भाई ये मेरा पैसा कहाँ गायब हो गया. Of course, if you're someone who knows how bonds work, it's not anything new. तो वो तो होने ही वाला है.
But let's look at another one, right? Are you buying it for trading?
No. I'm buying it to hold to maturity.
Absolutely.
If I'm in that category, then...
Absolutely. Actually, retail is not a trader in bond market. That is far away. Probably 10 years down the line, once people will understand that bond market mein trading is also possible, then they will think. Right now, I have not come across a single person who is trading in bonds and how there can be trading loss.
It reminds me of bank balance sheets, right? You've got HTM and AFS, no? Hold to maturity and available for sale.
They are traders.
They are traders.
Mutual fund is a trader in the bond market. They can lose money. So that's where, the difference is there when you do a direct investment in the bond market vis-a-vis mutual fund as a trader. When you invest in the debt mutual fund, do you know how much return you are going to get?
No, absolutely not.
Absolutely not.
Yeah.
You don't know what returns you are going to get. When you invest directly in the bond market, if you bought at 10%, even if you are holding till maturity, you are going to get 10%. That's the difference.
Yeah. So folks, there's a section in the BondBazaar website called Bondshala, which all of you all should please, spend some time in. See, understanding shares is fine. That's one thing. You understand, okay, you buy at a certain price, you sell at a certain price, you get dividend, and there are mergers and swaps and all. Bonds are very, very different. It'll help if you spend some time on the website and educate yourself. So actually, you've kind of almost answered my question just before we go into a break. How is investing in bonds different from investing in a debt mutual fund? We just spend some more time on that. Because what happens is, today when you're talking about this with the person, he'll say, यार मुझे ये सब समझ में नहीं आता, मुझे debt mutual fund दे दो, बस खत्म बात.
Okay. let me try to simplify.
Okay.
Probably it gives some subjective answer, then probably it may help. What is debt mutual fund? You can invest right now and you can withdraw anytime, right? So the biggest thing is that they have to maintain liquidity because there can be withdrawal request anytime. 10 to 15% liquidity sometimes part of their AUM, right? Second thing is, they will invest from 1 day to 3 years or 4 years, all sorts of bonds. Debt mutual fund means they are investing in bonds. That's the only instrument they have, right? That is one thing. Now, if the short-term maturity bond is there where the coupon is less, long-term the coupon is high, correct? So this is called debt mutual fund. So if you have money, you don't know when you will require money. You may require money after 15 days, 20 days, 30 days. Best to invest in debt mutual fund. Because whenever you require in 1 day's notice, you can withdraw the money and something like that.
Sure.
But then suddenly you are an investor with 2 years horizon and you go to the debt mutual fund. Actually, you subsidize to the people who are investing with 2 days or 3 days or 5 days, they want to withdraw money. Because that 10% cash which is keeping, which is yielding hardly anything because he will invest in some treasury bills or something like that.
Yeah.
They're bringing down your return. Second thing is the people who can withdraw any money, they have to invest in a regular maturity mutual bonds and all other things which are yielding rates returns. So there are two categories. The people who want to withdraw money anytime just by investing, and anytime in the sense less than 1 month, let's say, debt mutual fund is the best. But when you are investing with a sum, at least 5 to 6 months hold period, after that, even if you can get liquidity in the bond market, you can sell the bonds. Direct investment is better for you.
Very interesting.
Because the debt mutual fund guys will invest from 6% to 9% everything. Because 9% is longer term maturity, slightly less liquid and all other things.
Yep.
And 6%, 7% is really liquid because they don't know when they are going to get the liquidity. You know that what happened in the Templeton, right? When there is a withdrawal, there is a huge withdrawal. They're running that risk. So if it is very short term, go to the debt mutual fund. But if you have some horizon, 6 to or more than 6 months, or definitely if you are investing for 2 years or
longer the better.
Definitely go for the direct investment in the bond market. You can increase your return at least by 3 to 4%.
Very interesting. So folks, on that, we're going to take a small break. Now that we've explained to you how the product works, how BondBazaar works, we'll be talking about specific strategies and how the bond market looks now to Suresh. All of that right after this short break.
Hello! It's been another great week on IVM Podcast Network. On a new show with HDFC Bank, we raise awareness about cyber frauds. The first episode features cybercrime investigator Danya Menon and neurologist Dr. Sid Warrior. Ties into digital arrests. Catch the episode on V for Vigilante YouTube channel. On Cyrus Says, Sheba Chadha joins Cyrus and shares a journey from Delhi roots and theatre days to her OTT hits like Mirzapur and Bandish Bandits. On A Century of Stories, Kunal unveils the incredible story of Netaji's daring submarine transfer during World War II, a testament to his unwavering dedication to India's freedom. And folks, if you like our show, spread the word. Tell your friends and don't forget to rate and review them wherever you are listening to them. Follow us on social media. We are IVM Podcast on Twitter, Facebook, Instagram and LinkedIn. You'll also find all our shows on YouTube by their show names. So do look out for them and have fun watching. And finally, we would like to thank our sponsors of this week: IDFC First Bank, Axis Mutual Fund, SBI Mutual Fund, ICICI Prudential Mutual Fund, IndusInd Bank and HDFC Bank.
And welcome back. Suresh, how do you source your bonds? As in, are you like an exchange that you have every bond that is available to buy and sell on your platform, or do you also have to get that from somewhere?
See, what we do is we are a player in the primary market also. Like let's say there is a issuance called Edelweiss Alternate Asset Manager, which is, the company who is managing the entire asset management business of Edelweiss Group, something like that. We do a 50 crore issuance for them in a private placement market.
Okay.
And they place these bonds in the secondary market to the retail investors because, you have to subscribe in this end. So this is one way we source our large part of the inventory.
Sure.
So that's why probably, 2 to our retail investor, we don't charge anything because we get our fees from the primary market. That is one thing. Since we are providing access to this exchange platform also, where it is easy to buy and sell any bond, our customers, let's say I don't have a particular inventory to offer to them, they can buy from that market from anybody else also, because anybody can be a seller. So both ways my customers are getting what they want. So that is one way we are doing it. Of course, we can buy bonds from the secondary market also, because there are outstanding more than 45 lakh crore bonds are outstanding in the secondary market, in the corporate bond.
In rupee terms?
In rupee terms,
Okay.
45 lakh crores, right? So this inventory is lying with all these mutual fund, insurance company, provident funds, banks. So if one particular bond, if somebody want to sell and we think it is good for our retail customer, we buy from secondary market also and offer to our customers.
Okay, so that's possible.
That is possible.
Okay, so then how many bonds are available on your platform for investors that sign up with you? And just an approximate range of the credit rating, if that's possible.
See, ours is a perfect marketplace. So anybody, any bond which is listed bond, by default is available on our platform to buy and sell.
Okay.
That's a big thing.
Okay.
That is different from other platforms. So that is first thing. Whether I like it or don't like it is available. Because it's a marketplace, right? Any bond which is listed bond is available on the platform. On daily basis, more than 4,000 bonds are quoted for buy and sell on the platform. Because there are maybe more than 12 to 14,000 bonds which are actually listed on the platform. But 4 to 5,000 active quotes are available for the people to buy and sell. And maybe more than 5,000 crore worth of bonds are available daily basis.
That's a big number.
Yeah. And the range is, you asked about the range. So government bonds, there are more than 250 government bonds are available. Minimum investment is 100 rupees. Their range is normally 7% to 7.5%.
Yeah.
And the tenor is 30 days to 50 years. So in case of government bonds. Then second is about corporate bonds. The corporate bonds, government bonds are not rated. All are sovereign because the default risk is zero. That's why they are not rated. Whether it is a state government bonds or central government bonds. Both are sovereign. There is zero default risk. So there is no rating for that one. When it comes to the corporate bonds, from 8% to almost like 17-18%, all the bonds are available.
Okay.
That's the range typically is there. And the rating from AAA to normally BBB minus, up to BBB minus, all the bonds are available.
There was one, I think, South mein some government, was it a discom or was it an utility or someone had defaulted? Abhi recently, last week, kuch aisa news aaya tha. I don't know. You remember that?
Telangana.
What happened there?
Interesting. So, these are certain interesting things. And since you raised this point, I will cover two things there.
Okay.
One of the thing is what happened in this bond. This bond was issued when Andhra Pradesh was undivided Andhra Pradesh.
Oh, okay.
So this company raised money. The bond...
State-owned
company. This is Andhra Pradesh Power.
So again, sovereign?
No.
Acha, okay.
Andhra Pradesh Power Corporation is not a sovereign. It is a state-owned entity.
Okay.
They are prone to default. If
so
they default.
That's one rung lower, correct.
One rung lower, right?
Yeah.
These are corporates.
Yeah.
It is actually corporate, but their borrowings were guaranteed by the Andhra Pradesh government that if this guy will not pay, then I will pay.
Okay.
So after defaulting, the government will step in and pay.
Correct.
Let's be very clear. First, the company has to default, then the government will step in and pay.
Okay.
That was a structure which used to be prevalent 10 years back.
Right. When Andhra Pradesh was united.
All the bonds where guarantee of the state was there, first you have to default, then the state will pitch in and then will cure the default. So first it means has to default. Then the division happened between Andhra and Telangana. In this particular case, this company, the liabilities were also split between Telangana and Andhra.
Okay.
So Andhra Pradesh and Telangana, but there was some bit of confusion remain about the liability.
Okay.
So there was a huge issuance. Part of the issuance is already paid off by the Andhra government also, by Telangana government also. But there was some confusion which is remain, which is, I think, it is pending in the court.
हो जाएगा. ऐसा नहीं कि that money will not come back.
I
right?
think they already paid some bit of retail.
Good, yeah.
Already paid, by the way. I think, see, of course, what I heard that, They come together, chief minister, they are very clear that
Sure.
and they will, it's a state guarantee. Ultimately, the money is going to come.
Yeah.
But please understand that what happens when any state guaranteed bond, it is not BondBazaar money. I am the owner of BondBazaar. अगर मुझे किसी को payment करना है, I'll just ठीक है यार, settle करो, move on in life.
Correct.
Right?
Yeah.
But when it's going to state government, there is a IS officer. He need a paper to make any payment, and a very clear paper that yes, this liability is due and I have to make this payment. That was not clear.
Okay.
And today, if you make the payment,
Okay.
and then somebody raised this question, boss, how this liability was there? It was not Telangana's liabilities, Andhra's liabilities. Then that guy will be under much bigger scrutiny. This is the problem of this particular bond. It was unique.
Okay.
It's not an intent problem.
Yeah.
It is a process problem.
Yeah.
Still, both the chief minister are coming together, and it's a huge money. So it is not that it is around 1 or 2 crore or 5 crore. It is 1,000 crore of money, let's say.
Massive number.
But the best part is both the government is coming together and resolving this, I'm sure, very soon. Now what is happening? This issuance has happened. This default is not of today's default, by the way. The default happened 4 years back.
Oh, okay.
Just a news item come today doesn't mean the default has happened today.
Sure.
First thing, let's be very clear. The company is derated 4 years, 5 years back.
Wow, okay.
That's one thing. After this, Telangana, in fact, recently raised 10,000 crores to the bond issuance. Amazing bond issuance. But now how the journey of state guarantee bond has changed. Now earlier, it was first you default, then the state government will pitch in and cure the default, which is happening in this case. They will cure the default.
Yeah.
Now, even before the default, they say that if the money with the company is, let's say, 6 months, next 6 months servicing is not there, state government has to pitch in and put that money in the account. So it is before default. Now that's why you see after the Telangana issuance, there may be at least 70,000-80,000 crore is raised from the bond market by these companies through the state guarantees. There is nothing, and everything is getting surprised. So this is a past issuance which is getting resolved through the court process. It will get resolved. New issuance are different. They ensure that default per se should not happen. Before that, only state government should pitch in.
Yeah. I mean, I like the fact that you mentioned it's not an intent issue, because share market mein to intent ka issue hota hai when you have a fraud promoter who...
By the way, can you remember a single company where the guarantee was given by the central government or state government in the history of India where the default has happened and it is not cured? Default can happen. By the way, you're surprised that even in case of MTNL, there is 1 day default. एक दिन के बाद में पैसा दे देना बैच के साथ में.
No, I can't remember.
Yeah,
because there isn't any.
Yeah, this is why, that's why, please understand, state guaranteed है, intent का issue नहीं है. The day you have a intent issue and government is involved, you are living in a country.
हाँ, then the sovereign का concept ही गया ना फिर तो. I mean, yeah, if I want to take risk of...
See, of course, when the regulator comes in, he will say, ki, boss, technically he can default. Technically. Yeah. That's why I said intent is more important, just the process.
Yeah. Okay. So you mentioned an RFQ portal in the starting of the show. Were you referring to what's called the RBI Direct portal, or something else is there in that?
RBI Direct portal is totally different.
Because I am used to that. So that's a relatively new product. I'm using that as just a kind of comparison for people, who say that why should I go to BondBazaar? I'll go directly to RBI Direct Retail. But wo platform to alag hi, matlab you need to have some real... I tried, but I couldn't. And they also have an RFQ out. They also have this system. So I'm just trying to compare the process, right? BondBazaar, I'm sure, is pretty smooth. You've got RBI, which requires some amount of...
So first thing is RBI Direct Retail. So, when you buy, only government bonds are available. Select government bonds, not all
okay.
The
there's no corporate, there's no private sector.
Corporate bonds are available. So only government bonds you can buy. Ideally, what they prefer that you buy in the primary market, because RBI is coming every week. They issue bonds for the state government and for the central government also. When they are issuing bonds, what they say, it is more like the way you do the debt IPO or equity IPO. 5 days before, they ask the retail investor, 4 days before that, if you are interested, then give. And they collect some money. And whatever the cutoff yield is there, at that yield, they will transfer bonds to you.
Okay.
That is one thing. Okay. And second thing is, then in RBI Retail Direct, you can try to buy in the secondary market also, because that is more of a secondary. This is a primary and secondary. Both the options are given. The problem is, secondary market, liquidity is not there because there is no market maker. First problem. Second thing is, only certain limited government bonds are available. There is a third and fourth problem also.
What is that?
All these bonds come in your CSGL account. That is something account because there is a demat account concept. Government bonds, there is a CSGL account which is opened with RBI.
The special general ledger.
General ledger.
Whatever.
Yes. Right? CSGL account it is called.
Okay.
Customers. So the problem of that one is, let's say if these bonds you want to, if you are a FNO trader, you are futures and options trader, you have to give a margin money. Right? So that margin, instead of the margin money, you can give government securities also as a margin.
Okay.
But if it's part of the CSGL account, you can't give.
Okay.
It has to be part of your demat account. Okay. So if you buy bonds on the platform like BondBazaar, on the cash market, first it comes in your demat account.
Sure.
In one view, you can see your portfolio and everything. It is easy for you to give it for pledging and borrow money also. And selling is also easy. So that's a big difference. Even if it is only for the government bonds. Forget about, because otherwise, anyway, you are not getting corporate bonds there.
Yeah. So now let's get into the process of buying and selling bonds on BondBazaar. What's it like? Like I sign up on your platform, I guess it takes sort of whatever, Aadhaar, PAN card, etc. What happens next? That I decide that, chalo, take it at one, that I want to buy bonds. Let's say that I've got ₹1,00,000 then, and I want to buy maybe 2-year. So do I put in the specifications out there and then you suggest what's
So
good
how
for
you
me?
buy equity?
Okay. Direct equity, I don't know. I know that I have to buy Reliance or I have to buy ITC. मुझे नाम पता है क्या है. फिर मुझे सिर्फ ये डालना है कि मुझे 100 शेयर खरीदने, प्राइस के ऊपर फिर फाइनली ये होता है. That's as simple
So
as
let's
that.
say if you want to buy equity on the Zerodha, what do you do? First you complete the KYC.
Yeah.
Aadhaar card, PAN card, bank account details. These are the
Demat
things
account,
that
whatever. Yeah.
Yes, demat account in the sense, in the process it get opened automatically.
Yeah.
After that they activate your account. It takes 24 hours, slightly. You open the app, go to the app, add money, select the bonds, जो भी bonds available है, buy, it is done. Right?
Okay. So as good as
Same
equity.
process.
Yeah. Same
as good
process.
as not. It is the same process.
Okay.
Now, if you want to sell the bonds, what do? How you sell equities?
I just put them on hold from my link my demat to the brokerage account, which it already is. Just press sell and that's it. You're done.
Same.
Okay. That's
one click buy, one click sell. Money comes directly, since it is and then you can withdraw money the way you can do in equity market.
Okay, fantastic. So then I have to ask about the transaction costs, and and we know that all of this is in demat. There's no physical certificate.
There is nothing in physical. Everything is in demat format.
Transaction costs?
Absolutely zero.
From your side? But
Yes.
exchange cost, stamp duty, transaction tax or
This
something?
is such an immaterial thing. It is sometimes if you are buying 1 lakh rupees, it is hardly 1 or 2 rupees or 5 rupees. It doesn't matter at all.
Okay.
And that is whatever the exchange charges is something. But it is hardly anything.
From your side, you don't have any transaction
Nothing.
costs as of now?
Nothing.
You plan to charge them maybe going forward as your platform becomes bigger and bigger? Or
Not really.
Okay.
No,
Very
not
interesting.
required actually.
Now let's get into the whole outlook part. Where we are, what's your view? Because for someone who's been in the bond market for such a long time, this is an interesting place where we are, right? Because interest rates are longer, higher for longer or whatever you want to call it. We know it will fall. But entire 2024 aake chala gaya. People thought interest rates will fall, will get cut. US has started. India, what's your view?
So this you are not talking from the retail perspective, right?
No. Now I'm talking general.
General.
Yeah. To look at it as kya lagta hai. Like in equity markets, you have a kya lagta hai, Nifty target, Sensex target. Debt market mein aapko kya lagta hai?
See, first thing is, I think, let me go back and try to give you some background that where we are as a country and what can happen and, what should happen. See, these are two different things, right? Sometimes what you say that in the equity market also, it should ultimately go to or rise 20% or become. But today, in next 3 months, what is going to happen, it is anybody's guess, right? Something like that. The bond market is also similar, right? Sometimes. So, in case of India and US, you talk about the US, the interest rate differential used to be closer to, let's say, 3.5 to 4%. Means US 10-year, if it is at today, it is around 460, 470, something like that. then India should be closer to 8%.
Correct. Yeah.
But where we are today, 6.8.
And they are at 4.5 or less than 4?
They are 4.64. It is means
4.6,
2%.
Okay.
It is one of the lowest interest rate differential which we are doing. What is interest rate differential? Is basically because US is more safe, inflation is lower. There the inflation target is 2%. India inflation is 4 to 6% or something like that.
Yeah.
Correct. So India, actually, the interest rate has not gone up when the interest rate was going up in US. So that is first thing.
Okay.
If there is a differential is less, then it is less attractive for the international investor to invest in Indian bond market. That is one problem. Second problem is Indian companies will not go overseas to borrow money because in India interest rate is cheaper than the overseas. It means forex is also not coming in India.
Yeah.
There is a capital market problem, right? And if the money is not coming in India, it means currency will depreciate faster, which is actually happening.
Which is actually happening now, yeah.
Right? Actually, you're surprised that the currency depreciation is in the range of 4% for last 3 years because the interest rate differential has come down. So that is first thing. Now, second part of the problem is that, of course, the GDP growth is compromised. We all know the GDP growth is coming. We don't know why, governor is changed. He has done an amazing job.
ठीक है वो तो मतलब ना आपके हाथ में ना मेरे हाथ में. Correct.
But, by design, you think that if you reduce the interest rate, the GDP growth will go up. I don't think so.
Okay.
But the larger problem is, most of the banks, if you see, their deposit growth is falling like anything. People are not saving enough. The saving ratio is coming down. So if you reduce interest rate further, people will be more prone to get into risky assets of equity or something to make more money.
And they won't have money then banks will not have any money to bring in.
Which is already a case. If you see in the deposit growth of even the large bank of HDFC, they are struggling to get money. In the certain banks, the deposit growth is almost like zero.
Even after offering.
Should you reduce interest rate?
Yeah. जितना आ रहा है वो भी चला जाएगा.
So in my view, personally, you ask, even if RBI reduce rate by 25 to 50 basis points, actual rates will not come up.
Transmission,
it should not come out because the demand per se will not there. So second thing is, we are talking about US, right? The rates they reduce the rate by almost 100 basis points or more than that. But what happened? The rate was 3.6 US 10 year. They reduced rate by 100 basis points. Rate has gone up by 100 basis points. So just by reducing rate, the transmission will not happen. It's ultimately a game of demand and supply also. So my view is, RBI will reduce the rate. They may, because sometimes there are different type of things. But rates will come down. No.
Okay. Very interesting. So now, just to wrap the entire episode, what is your advice to someone who's looking to invest in bonds for the very first time? And how should he approach his portfolio? Now, एक asset allocation होता है. Let's leave out the equity part. Let's look at the debt part. Like, what would your advice be? अभी आप कहीं gathering में जाते हो तो आपको लोग पूछते होंगे भाई, where should I invest? What's looking good? For someone who's brand new into bonds, how do you think he should look at making a long-term portfolio in bonds?
See, first thing is, take a first step, which is, just have a target yield. A 10%, start the journey. Somebody has told you that, first buy the bond. There are certain bonds are available. If you have a target yield of 10%, you will get 10% bond.
Okay.
That is the start point. Okay, this is where, I start investing in the bonds. Your first experience will be that, the interest and principal is coming directly on a bank account. You will get some experience that how it is working.
Yeah.
Second experience is that you will be able to sell the bonds. That's the second thing. Once you will have this experience, you will start selecting bonds on your own.
Okay.
You will start building the portfolio. The biggest realization for you will be that, which is the experience. As compared to FD, if you are getting 5 to 7% higher returns, it means that every year, even if there is a 5% NPA in my portfolio, I can afford that one. Second thing is, suddenly you will realize that you always talk about weighted average yield in your portfolio, right? Equity, AIF, something like that.
Yeah.
Just by bonds, you are reducing your risk and increasing returns.
Correct.
Suddenly you will realize that even part of your equity portfolio you can start shifting into bond market. Because some part it will become an interesting exercise for you. But it's a journey. in the journey, my suggestion is first just allocate 5% of your portfolio into bonds. Buy bonds. And experience 2-3 things that you can sell also.
Okay. Now, once I've crossed that threshold, then what do you think is looking good right now to you? Like, would you say, corporate, law? So I'm looking at both sides, right?
So
one is type of issue.
I am always a fan of goal-based investment.
Okay.
When I say goal-based, how it works, basically, you are in the age of, let's say, 55, 56, 57. I will suggest you buy a deep discount government bonds.
Okay.
Because in interest is payable on the government on the bonds when actually you receive it. So if you are buying deep discount, after the retirement you will get all the interest, right? And during your earnings, yes, you may be paying 30% or 40% tax. After the retirement tax rate by design it comes down, right?
Yeah.
Because that one. So it's a huge advantage.
Very
it's
interesting.
safest rather than planning some pension or something. So that is one way.
Okay.
One goal. Second is, you are right now in the age of 40, 45, you are paying 40% tax or something, like buy tax-free bonds available at 5.6, 5.7%. Pre-tax return is almost like 9%. You don't want to get, bothered about because you are too much busy, and if you are already in 40% tax bucket, buy tax-free bonds.
And the tenure on them is still 10
4
years?
to 5 years is pending.
Is still there?
Still there.
Okay.
So you are paying 40% tax, you are well-to-do in your job, just focus on, building your portfolio in a particular manner. Don't take something like that.
Yeah.
You are planning a vacation, right? Serious is jazzy vacation or something like that. So you have to save for 1 year. Buy 12% or type of bonds. Some risk is there, but return is pretty high, and risk is also very manageable.
Okay.
Save money for 12 because suddenly you are earning 5 to 7% more.
Yeah.
Right. After 1 year, sell all the bonds. The huge money is there, and you can plan your vacation. The same thing is applicable for house. You can try 9 to 10% bonds because it is a much more safer money.
Sure.
So I always suggest that, your goals should be very clear in your mind.
Right.
Bond market give you flexibility of each and every time. And that's the advantage of bond market. There are so much products, so many things are available that if you are clear about your goal, somebody can advise you. If actually he want to give you right advice, he will advise you which bonds to buy, which will suit you best.
Yeah.
And it meets your requirement.
Very interesting. Folks, as usual, our disclaimer, please do your own research before buying. Suresh's recommendations were generic in nature. He's just pointing you towards how you can plan your investments in a goal-based way. Please don't take them as specific recommendations to go and buy anything you want. So
absolutely. Please always do your research, own research.
Consult an advisor. Okay, Suresh, we're done with the show. We have a standard question in the end for all our guests. Any content, any book that you're reading that you'd like to recommend to our audience?
See, throughout my life, my career, I am an avid reader.
Okay.
So whenever I get into, fortunately, I got an opportunity to get into various businesses, various different type of businesses. I read a lot about research reports, about content on the website and all the things. And the best readings for me is when I can apply them practically.
Okay.
The learning is pretty high.
Okay.
So I always suggest that whenever you are getting into anything, read a lot of literature about that one. There may be books, there may be literature on the thing. And once you are doing a practical application of that one, the understanding is pretty high.
Yeah.
So, but one of the book which I always like is about Mahabharata.
Very interesting.
And that always inspire me for various other things. But otherwise also read lot of things.
The classic text you're saying of the Mahabharata. Yeah. Folks, like Suresh said, there is a lot of material out there, books and resources. There's Bondshala on BondBazaar.in and everything else. And those are really the books, the material, the resources that you should be reading before investing in bonds. But that's it. That's a wrap on this episode of PaisaVaisa. My guest, Suresh Darak, founder, BondBazaar. Suresh, thank you so much for doing this for our audience.
Thanks, Anupam. Thanks a lot for this amazing discussion.
Great to have you here. Thank you.
Thank you.